Light is Britain's far-right conspiracy theory paper spreading hate and vicious lies. No, that's what the BBC say. The Light is the only national newspaper bringing you the real news and informed opinion on what's really going on today. You can subscribe, order copies, submit articles, and read back issues on our website, thelightpaper.co.uk, and see for yourself why the establishment are so worried about the uncensored truth getting out to people every month. The Light Paper. Not far right, just right so far. thelightpaper.co.uk.
Scene script. Have you ever pondered the idea of financial independence and early retirement? The notion of not having to clock in at 9 or wrestle with the daily grind? Imagine a life where you're not shackled by financial obligations or a demanding job. It's not an impossible dream, but a reality for those who embrace the FIRE movement. That's financial independence, retire early. Consider the tale of Jane, a woman in her early 30s. Jane was an ordinary person living an ordinary life. She had a 9-to-5 job, a mortgage, car payments, and a lifestyle that was comfortable but hardly extravagant. And like most people, she dreamed of a life where she didn't have to worry about money. Jane decided to make a change. She began by cutting back on non-essential expenses, saving as much of her income as possible. She invested wisely, focusing on assets that generated passive income that didn't require her to trade time for money. Slowly but surely, Jane began to build her financial independence. She was still working, but she was no longer living paycheck to paycheck. She had a safety net, a cushion that gave her the freedom to make choices based on what she wanted, not what she needed. Fast forward 10 years, Jane, now in her early 40s, had achieved her goal. She was financially independent. She had enough passive income to cover her living expenses, and she no longer needed to work to survive. She was free to retire early, to spend her time as she pleased. Jane's story may seem extraordinary, but it's not unique. It's the story of anyone who has embraced the principles of the FIRE movement. It's a tale of discipline, of sacrifice, and of a relentless pursuit of financial independence. To summarize, the key points discussed today revolve around the idea of financial independence and early retirement. It requires discipline and sacrifice, cutting back on non-essential expenses and saving as much as possible. It involves investing wisely, focusing on assets that generate passive income. But most importantly, it requires a change in mindset. It's about seeing money not as a means to buy things, but as a tool to buy freedom. It's about understanding the true value of time and the freedom that comes with not having to trade it for money. This is the essence of the FIRE movement. It's not just about retiring early, it's about achieving financial independence, about gaining the freedom to live life on your own terms. Like Jane, you too can embrace the principles of the FIRE movement and embark on a journey towards financial independence and early retirement. After all, the only thing standing between you and your financial freedom is you.
Ever wondered how much you'd need to save to achieve financial independence? The answer lies within the mathematics of a concept known as FIRE, which stands for Financial Independence, Retire Early. The most essential number in your journey to financial independence is calculated by multiplying your annual spend by 25. Notice the emphasis on annual spend, not annual income. This calculation is based on the principle that you need £300 invested for every pound you wish to spend each month in passive income. Hence, your FIRE number is also your monthly spend times 300. This mathematical principle is founded on the 4% safe withdrawal rate, as defined by financial advisor William Bengen. He proposed this rate after analyzing the S&P 500, which typically produces an average of better than 10% growth per year when studied over a period of approximately 30 years. Bengen considered factors such as inflation and market volatility. After studying previous market activity, he concluded that a 4% rate of withdrawal per year would provide for a 30-year sustainable portfolio in the vast majority of cases. So to paint a clearer picture, if your monthly spend is £1,000, then your target for financial independence is 300 times 1,000, or £300,000. Alternatively, if your annual spend is £12,000, your financial independence target is 25 times 12,000, which also equates to £300,000. The first step in planning your financial independence, therefore, lies in understanding your monthly and yearly expenditure. Without this knowledge, it is impossible to take further strides towards your financial freedom. In summary, the mathematics of FIRE revolves around the principle of multiplying your annual spend by 25 or your monthly spend by 300 based on the 4% safe withdrawal rate. Knowing your monthly and annual spend is crucial in determining the amount you need to save to achieve financial independence. Armed with this knowledge, you can then plan your journey towards financial freedom. Remember, the journey to financial independence is not a sprint, but a marathon. Embrace the mathematics of FIRE and take the first step towards your financial independence today.
Good morning, guys. It is 7:57 on Monday the 26th of January 2026, and that means we've completed 3 years and 43 weeks of this roughly 8-year FIRE journey, or FIRE experiment if you prefer. Just a couple of minutes before market open, let's have a little look at where it closed on Friday. So Friday's statistic for market close was down almost 0.75%. Now the number on screen there, 96.55, I'm not actually sure if that is the actual closing figure or if that could have been influenced by exchange rate changes during the weekend, etc. But anyway, the down 0.7% is going to be correct. When we look at the other detail in the portfolio there, we see current portfolio value sitting just over 31,000, the return on investment at 31%. We have 322 shares in the market, and the average purchase price is 73.67. So just to explain a little of what you see on screen here as well, the dotted red line at the very top represents the current price point. The graph is basically the historical prices up to the current, which would be the very end on the right hand side there. And this solid green line underneath represents the average purchase price. So that's the 73.67. I think yeah, so basically what we're seeing is that the gap, I suppose, between the green line and the red dotted line is effectively what you might call the profit or loss area. Of course, in this case it is profit, and as I say, up 31% as things stand, so not too shabby. So the market will be opening in roughly a minute, but just before that, let me draw your attention to Monzo.
I want a bank that makes money easy.
That sounds perfectly reasonable.
And you are?
We're a bank called Monzo.
Oh.
I want a bank that shows me what I spend instantly.
No problem, just give us a go. See?
Can you make splitting bills easy?
Super easy, check this out.
But it's a real faff to sign up.
It takes less than 10 minutes.
Ratio.
You're on.
Can I talk to a real person 24/7?
Of course.
Even now?
Yep.
Even now?
Anytime.
Can you tell me when I'm running a little low on cash?
We certainly can.
Cool. Can I afford these?
You certainly can't, sorry. Can't afford that either.
That's a real shame.
Not really. Time's up. How'd you get on?
It's a draw.
Can you help me save for my next holiday?
Oh, how about you set up a savings pot in the Monzo app called Barbados, baby?
Thanks for listening, Monzo.
We're all ears.
We can go now.
Rude. You make Monzo Monzo.
Okay, so the market has just about opened there. The figure has reset, and the initial indication, like literally 2 seconds into market trading, is that it's down 0.5 to 2/3%. But while we wait for that to stabilize a little bit, let's have a look at the notifications. Biggest stocks before earnings: Baker Hughes, Ryanair, Steel Dynamics, Bank of Hawaii, Dynex Capital. Intel plunges 16% as weak outlook and production bottlenecks weigh on turnaround optimism. And European defence giant CSG debuts on the Euronext Amsterdam in the biggest defence IPO. That's an initial public offering on record. It'll be interesting to see how that goes when things settle. Of course, defence contractors benefit when there is instability on the international political scene, and I suppose at the present time you could say there is an abundance of that. There is the ongoing conflict in the Ukraine, along with plenty of politicking surrounding Venezuela, Iran, even China and Russia. Although I don't think there's much likelihood of any conflict in China or Russia just right now. But I'm trying to remember what the name was. Is it Taiwan that China has its eye on, or appears to be keen to take over at least? Anyway, we'll see what happens, if anything, in the upcoming future. But as I say, defence contractors typically do well when there is international instability. It's one of those things that can be a little frustrating, I suppose, if you're more interested in world peace. Okay, now we've had a look at the notifications. Let's go ahead and do this week's investment. So if you are a regular viewer to the channel, you'll know that each week I buy I buy £120 worth of shares in the Vanguard S&P 500 exchange traded fund. And it's basically a basket of the top performing 500 shares in the Standard & Poor's index. The index itself comprises around about 3,000 companies, so the top 500 really are the creme de la creme. And the reason for buying an index fund is really that the fund itself is it has been described in the past as something which would be self-cleansing, and what that means is that as some of the companies fail to perform as well as they were, but other companies which are maybe just outside the top 500 actually begin to perform a little better, then those less well performing companies fall off the top 500 and are replaced, and that essentially happens invisibly to investors. It's kind of an automatic thing, and it's almost as good, if not even as good or better, than having an actively managed fund. The figures achieved for the S&P 500, when you look at them over a 30 or 40 year period, are something similar to roughly a 10% increase on average year on year. Now, it is fair to say that you cannot rely on that every year. Within that 30 or 40 years, there will be years where the growth was negative, so you could maybe have minus 20% one year, plus 10% another year, maybe only plus 5% the year after that. And it's whenever it's actually taken in the round and looked at over a longer time frame, that's when you see this slightly better than 10% return on average over the long term. So coming back to our investment for this week, we're putting in £120. It's going to buy us roughly 1.25 shares at the current market value. We click review order. As you can see, this is a market buy. I am buying on the open market. I'm not using any stops or limits or any of the other tools that are available. There is no commission, and the total payable will be 120. Now, this is on the Trading 212 practice platform, so this is theoretical money. Simply for privacy reasons, I do also use Trading 212 for my own investing. But as I say, this is just basically for demonstration or testing, if you like. The method is good though. I personally do have my investments automated, so I don't have to actually manually go and do this every week. It is done automatically for me, and that gives consistency, and the people who know what they're talking about will tell you consistency is key. J.L. Collins famously said time in the market is more important than timing the market, because timing the market is not possible. It's just simply not possible to know what direction the market is going to move in at any particular time. So the trade has executed. We bought just under 1.25 shares, and our purchase price was 96.03. So I can see that the figures have updated. I think despite that, the portfolio value is now very slightly lower than what it had been at the start, and that's due to the downward movement in the market already this morning. So we are now left with a new portfolio value of still just over 31,000, but actually slightly lower than it was at the start of the video. The return on investment remains at 30%. Or in fact, was it 31 previously? Might have been just over 31% previously, I don't recall. And the shares, we now have 323, almost 324 shares in the market. The average purchase price will have increased very slightly, up now to 73.76. So there you go. As I say, this is roughly an 8-year experiment or a journey in financial independence. I stream weekly, usually around the start of the week if I can. And if you're interested in following that journey, why not subscribe to the channel? Alternatively, additionally, I suppose, if you particularly enjoyed this one, why not give it a thumbs up? But that is it from me for today. All that remains for me to do is wish you a good week, and hope to see you again next week. Thanks for watching.
I want a bank that makes money easy.
That sounds perfectly reasonable.
And you are?
Woke up one morning, saw the world in a new light. No more 9 to 5, I'm living my own number game to play. It's the freedom that I'm chasing, I'm walking away. They said it's impossible, just a dream so far, but I've learned to count the cost. Now I'm driving my own car. I don't need a mansion, don't need a fancy name. I've got peace of mind and I'm free from the daily grind shame. It's not magic, it's maths, it's a clear-cut path. Building wealth day by day, it's all about the craft. I've got my numbers straight, my future's looking bright. No more working for a paycheck, I'm free to take flight. It's not magic, it's maths, it's the way I live. Financial freedom's waiting, with all that I can give. I cut back on the clutter, I got my spending in check, investing in my future, no time for regret. The years go by faster, my money's working too. I got a plan that's steady and it's seeing me through. They said I couldn't do it, said it wouldn't last, but I'm retiring early, leaving all that stress in the past. I'm building my empire, brick by brick. The math's all adding up and it's working real quick. It's not magic, it's math, it's a clear-cut path. Building wealth day by day, it's all about the craft. I've got my numbers straight, my future's looking bright. No more working for a paycheck, I'm free to take flight. It's not magic, it's math, it's the way I live. Financial freedom's waiting, with all that I can give. It's the power of the numbers, that's where I stand. I'm taking control and I got the upper hand. No more chasing time, no more chasing fear. With the maths in my favor, my dream is crystal clear. It's not magic, it's math, it's a clear-cut path. Building wealth day by day, it's all about the craft. I've got my numbers straight, my future's looking bright. No more working for a paycheck, I'm free to take flight. It's not magic, it's math, it's the way I live. Financial freedom's waiting, with all that I can give. So head to the future, here's to the plan. Financial freedom, it's all in my hand. It's not magic, it's maths, and it's mine to take. A life of freedom, no more decisions to make.